Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, August 8th, 2007, and the market's closed. And once again, we had another good session on Wall Street. The S&P 500 finished with a gain of $2.03, up about 1.37%. But the daily picture doesn't tell the whole story. There was quite a bit of volatility in there, particularly towards the last half hour, 45 minutes of the day. On Monday, I had suggested that the first target for these markets might be up near those 20-day moving averages. And in this case, for the S&P 500, you see that's 150.32. I had just kind of said about 150. It did get up to that level and turned lower from there. But where it came back to was important to recognize on the short-term time frame, because what happened was it broke past, it found support at the prior level of resistance, right around that 148 level that we were looking at as the potential breakout point here 2 days ago. And yesterday, of course, we did get the breakout past that level. So it is somewhat encouraging. You know, the speed of that decline here in the afternoon kind of made you wonder whether the gains were going to hold for the day. But at the end of the day, the buyers did take back control and turned out to be a very positive session. So you saw a nice increasing volume here on at the end of the day as well as it rallied up. On the daily picture, though, once again we're seeing diminishing volume on a rally in a downtrend because we've got this declining 50-day moving average. So the market is perhaps getting a little bit stretched here to the upside after recovering nearly 2/3 of the full move that we've seen recently. You can see that it came very close to a 2/3 retracement with a move from about 156 down towards that 142.5 area. So the 2/3 retracement comes in at about 151 or so, and that's also where the approximate location of the declining 50-day moving averages. So those are just potential targets and something to be aware of. But for now, I think that you've got to look at this afternoon's lows right around 147.35 as an important level of support. Breaking below that is going to put us back on the defensive in the short term. But we do have a rising 5-day moving average, so that's a good sign for the intermediate term trend. But again, that daily time frame, the market is hurting pretty bad in here, and we're coming up into a potential area of a lot of resistance. So I continue to think that we've got to look at this as an aggressive traders market only. And again, the diminishing volume on this rally indicates that there's not as much conviction, there's not as much greed as there was fear on the way down. And that's just something to keep an eye on. Like I always say, only price pays. And the semiconductors, SMH, yesterday these guys didn't participate in the rally at all. And today we saw that they outperformed just a little bit with their 1.8% gain. That's 69 cents that they gained up to 38.13. And right up to this 50-day moving average, this market is probably looking more neutral than anything. But it did get above that $38 level that I said I thought the intermediate term trend would turn more positive. So that's encouraging to see. This 37 is going to be very important, continue to be very important going forward. And these lows here near about 37.80 should be some pretty good support, I would think, over the next couple of days. It's nice to see that we've got the 5-day moving average rising in the semiconductors for the first time in really a couple of weeks, since probably about right here, since about July 18th. So about 3 weeks, that's the first time it's been in an advancing position. So odds favor a little bit further upside. But again, this daily picture is a real mess, which means that it should really be just for more aggressive traders in here. And it could be frustrating to sit on the sidelines if that's if you're not a good aggressive trader, then there's potential for a lot of volatility in your account if you're not doing it properly. For some reason, my IWM chart isn't showing up properly here. However, the market did rally up. You can see the close is 79.56. And let's take a look at the intraday time frame. You can see that we got to move up towards the $80 level, which is right around near that, almost exactly at that 200-day moving average. So it rallied up and touched that. Now this market has come a long way in 2 days, 3 days. So it's gone from 74 up to 80. And that's a very big move for an index like this, about 8.5%, 9% in 3 days off those lows. So this market didn't close as strong, or did it? Looks like it did close up at 79.55 or so. So for some reason, my data is not giving me the full picture here. But nice recovery in the afternoon, like the S&P 500. However, we are at this area, the 200-day moving average, where we might run into some potential resistance. So continue to just trade very defensively in here. Keep your stops tight. In the Nasdaq 100, again, we do have a rising 50-day moving average, which makes this the healthiest market. But we still want to be careful in here. We'd seen this downtrend line break yesterday. I outlined middle of the day that this could, if you look at this as a double bottom in here, then the price target is approximately up to, you take the height of the pattern, 47 to 48.50, 48.40, approximately up to $40.
Virus database has been updated.
50 cents or so. And that's where it looks like this market has the potential to go. But again, remember your stops. It's not a, it's about, it's a potential target. It doesn't mean it will reach that. Nice to see the 5-day moving average advancing once again. We're going to have to keep an eye on these lows here. And again, this is where the buyers took that control yesterday, right around $48.45. That level was tested. It did hold as support today. So that is another encouraging sign, and this is your healthiest market out there. But it rallied also right up to that 20-day moving average. And if you look at Monday's video, I'd suggested that would be our first upside target, was about $49 a share. And that's really right about, it came up just a little bit above that level today. So things are looking better intermediate term, but still you got to be very careful out there.